All right, welcome to Let's Chat. We have Dan Beaulieu here and Zach with First Bank, and me and Grace are going to be talking to them about financing your real estate deals. So, wanted to start with Dan and just ask you a little bit about how you got started in real estate. Just tell us about your story and what got you going, and just a few things you've learned.
Yeah, absolutely. So it was 2016. I was a ship captain working in oil and gas, traveling the world. It was great. It was awesome. But it turns out when you're an employee at a really big company, you're just a little number, right? So you get laid off when you lose your contract. You're like, shoot, what do I do now, right? So I had bills to pay. And I'm like, well, maybe I'll just flip a house because that looks easy on TV, right? I needed money to pay my bills. Yeah, just like on TV, I thought I could make 100K on, yeah, exactly. So I found a house. It was a nice house, and I did all the work myself, watching YouTube videos. And so by the end of it, I knew how to do pretty much everything, which was really cool. But then when I actually went back and looked at the numbers, I was like, man, I made like 15 bucks an hour. I was getting there at 6 a.m. and coming home at 8 p.m.
Yeah.
for 4 months straight, man.
Yeah.
And so I'm like, that's not the way to do it. But I loved it, the process of flipping a house. And, I made like 30 grand or something, which is not a lot on a flip nowadays.
Yeah.
But it was enough for me to say, wow, I can make an actual career
Yeah.
and pay my bills out of doing this. So I launched all in on doing that. Started flipping houses, moved to Nashville, flipped houses there. And then I was looking for like maybe a side hustle at the same time. And so it was convenient timing that a company reached out to me and said, hey, we think you'd be perfect for being a loan officer for a company we want to expand to Tennessee. I said, well, I don't know anything about lending. I've never been in sales in my life. I don't know anything about this. They're like, well, that's exactly why you're perfect for this. I'm like, okay, all right.
Just do what they tell you.
Yeah, because I'm moldable, right? So, yeah, they flew me down to Texas. That's where the fund is based, and we hit it off, and the rest is history, man. They said, all right, now go out and find people to lend money to. I'm like, okay, how do I do that? Well, it turns out I was doing that already, going to networking events and trying to get my name out there as an investor.
Yeah.
And so the whole thing worked perfectly, with what I was already doing. And here we are 7 years later, known locally as Dan the Hard Money Man, and I'm never looking back.
That's awesome. So you go to your networking meetings, and so you can say, "Hey, I'm Dan. I'll buy your house, but I'll also fund your house, fund your deal."
Exactly.
You need that
I
too.
never really know what to say.
Yeah.
It's like, hey, I have money for you, or I'll buy your house. I don't know. Yeah.
That's good.
We'll make a deal
That's good.
somehow. Yeah.
Yeah. So what do you like? What are some things you're doing right now that's maybe like unique or just something that you're enjoying in terms of your own personal deals?
Yeah, great question. So I actually flip houses out of state, believe it or not. So every flip I have going right now, I've never seen before.
Yeah.
So David Green wrote a really good book on long distance real estate investing. I kind of took that to heart. Like, okay, if I build out a team, I think I can do this remotely. And turns out they actually go a lot better when I'm no emotional attachment to them whatsoever. They're just numbers to me. So I have a project manager, acquisitions person up in Vermont, that's where I flip houses. There's less competition in other areas than Tennessee, so I encourage people to try to, don't be scared to branch out a little bit and have boots on the ground, of course. But you can be successful without actually seeing the property. So that's primarily what I'm doing now, and the occasional local deal as well.
Well, how did you get to that point where you thought I'm just going to focus on remote rehabbing versus like your own backyard?
Yeah, I mean, so it was my backyard at first because I lived in Vermont.
Right. Okay.
So I was able to build the team while I was there. And then when I moved down here to Knoxville, I said, well, shoot, I already have the systems and the lead generation going. So like, let's keep it going,
Yeah.
And all the flips we've done after I moved have been more successful than when I was there
Okay.
looking at stuff every day.
Yeah.
Because I'd say, oh, I think we need to do this next.
Yeah.
Oh, we should do that next.
Yeah.
None of that. Just
Just let your
completely
people
remote.
handle it. Yeah.
It's much better.
Yeah, because people ask about remote wholesaling or rehabbing, and I'm like, well, you got to have a really good team if you're not there. But see, you're already familiar with that area,
Yes.
so then you had it set up, so you just kind of kept
That's
it
important.
going. So you had to get it going at
Yes,
first before you pulled
100%.
yourself out. Okay.
Be familiar with the market.
Yeah.
Be experienced with that contractor and know how you work well with that contractor. Have someone checking on your project
Yeah.
daily. My
Yeah.
project manager is the most important piece of my business now.
Oh yeah.
So
Good,
I couldn't
good.
do it without him.
Good deal.
That's the key.
It is.
It's
Yeah.
like anything.
Definitely.
New construction's the same way. Superintendents are everything.
Mm-hmm.
So Zach Nelson is with First Bank, and he does a lot of investors. In fact, they were having a great conversation before we started, where Zach's like, "I need your number. Like, I love, Longhorn Investments, and like, I need somebody that I know I'm giving it to." So Zach, tell us about your investment strategies with investors. I know you're an investor yourself, but like, how are you working with investors? And you work with investors all over the country. But you bring them locally, and you also can finance them around the United States.
Yeah, absolutely. Well, hey, appreciate you having me on here.
Yeah.
Always love to talk investing, inside work, outside work. Like you mentioned, I have some properties myself, short-term and long-term, and I believe in kind of exploring all the options. So that's the beauty of First Bank is we have a resource for everyone. We work with Dan and his team pretty extensively on the hard money aspect of acquiring distressed properties, getting them to rentable shape, and then I come in and get them on the friendly long term kind of rate and terms. But also we kind of have a little bit of everything, 1 to 4 units for investment for second homes. Working in that short-term space, but the product that I love the most and I'm doing a lot right now is, and we talked a little bit earlier about it, debt service coverage ratio, so DSCR for shorthand.
Yeah.
Really, really cool product. It's kind of outside the box. It doesn't have to adhere to the federal guidelines that conventional lending does. What I always say is, hey, let's try and qualify conventional first. But if we can't, then DSCR is kind of your get out of jail free card. The property itself qualifies for the loan, so no income documents at all. Actually, they can't be included in file when they get sent to underwriting. So we don't care how much the individual makes, if they're self-employed, if they're in between jobs, even if they have assets for closing and they have credit where it needs to be. That's pretty much all we need. So it helps people grow really quickly. And then the cool thing about this too, for my seasoned and experienced investors, is so often once you start hitting that 7, 8, 9 properties that you have financed, conventional kind of goes out the window,
Right.
and then you're stuck doing stuck doing commercial lending, trying to explore private money. These don't adhere to that rules. You can have up to 50 properties going with that service coverage ratio. So it really is for everyone, first-time investors
amazing.
or seasoned.
That's great. Up to 50 properties.
Yeah, it's really cool. It's always an adventure on my side of things when I talk to that seasoned investor who has 31 properties, and I'm going through and we're trying to make sure everything looks right. And I'm like, hey, if you want to save a lot of time on your end, because when you're a seasoned investor, time is almost
Everything.
that's as valuable as your money. It's like, hey, do you want to acquire properties that takes 15 minutes of paperwork on your end? Send me your bank statements that from where the money's coming from. Send me your driver's license, and let's get into underwriting. Very easy.
That's pretty amazing.
So Zach, when you talk about how you try to see if they qualify for conventional first versus the DSCR, what is the reason for that exactly?
Yeah, great question. So conventional lending, and it's the reason that's kind of where first-time investors or even seasoned investors with 5, 6 properties under the belt are always going to kind of start there. Is the pricing and the rate and terms are always going to be best there.
Okay.
So we always start with what's going to be best for them. I have access to the full gamut, so whenever I'm having that conversation, whenever I have the application come in, I always let them know, hey, you're not being pot committed to this one scenario, to this given program, but let's always look at the least cost option first. And if we can't make that work, then don't worry, I still have something for you.
Good. Okay. So it's different options. Good.
All right. So who are the best investors for you?
The best investors for me, someone with a really good deal.
That makes it easy, doesn't it? Makes it easy.
Honestly, could be anybody because you do not need to have that much money or even perfect credit for our loans. 600 is our minimum credit score. And I tell people, if you don't have that, but you have a really good deal, well, does your brother have good credit maybe? Or like your
Yes.
sister-in-law, like your mom? I don't know, whatever.
Yeah.
People do deals with family all the time with us.
Right.
So really, if you can show those funds in your bank account and they don't need to be seasoned per se,
Oh,
we don't really
really?
care where they come from.
Okay, well,
And
that's
so
nice.
people partner up, it's
Right.
like, it's really just important that they find a good deal and we'll figure it out from there.
So what's a good deal?
So the ideal fix and flip deal will be your all-in purchase price plus your rehab cost for 70% of the after repaired value.
Okay.
Because our loan is going to be 70% of the after repaired value. So if you can be all in for 70%, we'll lend you 70%, then you have zero down. And that's an awesome model, and not a lot of hard money lenders do
Yeah.
that.
Very true.
I think we're one of maybe like 3 in the whole country, and I don't even know the other 2. So it's like, it's great because you can get into these properties for just closing costs. So if you're a brand new investor and you don't have $100,000 in the bank, but you've stumbled across a really good deal, we're a perfect solution.
Yeah,
That's
absolutely.
why we love working with Longhorn, is for that reason of the aftermarket appraisal value, because I can come in and get them into, because he doesn't want to hang on to this loan forever. He wants them to get into a scenario where either you're selling it or you're long-term financing.
Yeah.
And when it's at that 70% mark, puts them in a really good spot for the refinance on my end to get into a really friendly rate and term, 30-year fixed, let it cash flow. That way they're not out of pocket when I come in to get that loan out of you.
Yep, exactly. And we'll even go up to 75%. If we know they're going to be doing it as a rental property and going to you to refinance, then you get them a proof of funds on the front end. We'll actually just do 75%. So 75%, zero down is super aggressive lending. So like, we're not going to be the cheapest lender. We can't be the cheapest and also the most aggressive.
Yeah.
We'd not be in business anymore.
That's right.
So we try to stick to that one thing and do that really well, which is, if you want to keep your cash in your pocket, that's where Longhorn Investments excels. And then for you, when you're doing DSCR loans, you want to see significant cash reserves as well, right?
Yep.
That they haven't depleted their entire cash stash on a down payment, right? So it works really well
Yep, that's
with,
right.
with my lending and then yours.
Absolutely.
Okay, so question. We're in a very unusual market right now. I'm working with investors who have done flips and they've done an amazing job, and where the pricing was 2 months ago and now, we're sitting still on the property, which is unusual, but it's a weird time in real estate. Buyers are not like chomping at the bit. They're being hesitant because it's an election year. Interest rates are all over the board. Are they going to go down? What am I going to do? I always try to tell them right now, like, marry your home and, just date your interest rate.
Yeah.
But that's still struggling for people.
Yeah.
So when you're talking about 70 to 75%, that's kind of funny right now because we have a moving target from a price point perspective of the true value. So how do you deal with that?
Yeah, it's been an interesting time because, where previously, and especially like, 2021, 2022, you would get an ARV appraisal and the investor would be selling it for $50,000, $100,000 more than the appraised for.
Exactly.
You could not lose money flipping the last
Exactly,
few years, right?
right.
And now reality is kind of kicked us in the butt here. And it's like, okay, we're back to sort of a normal time. This is what it should be, right? You have to buy right. You have to do proper rehab work. Don't cut corners.
Right.
Maybe stage your listings. People used to do that, remember?
I've really tried to tell people about that. Like,
I mean, that's coming back.
yeah, well, exactly.
Yeah, and don't get so aggressive on the price. I always think it's better to price low, slightly under market, and the market's going to tell you what your property's worth. I'll always list slightly under market. It gets bid up anyways, right? It's way better than pricing too high and having it sit and then having reduce, which a lot of our clients, unfortunately, are going through.
They're struggling with right now. What I've tried to tell them is like, look, if you reduce your price by $10,000, you could buy $10,000 and buy down for an interest rate which make a much higher impact
Yeah.
for a buyer. So Zach, tell us about that because I think investors are missing the boat on the buy down versus
Yeah.
a drop down.
Yeah, absolutely. So couple things with that, depending on, and I don't want to get too nitty gritty because I put everybody to sleep if I get too into the guidelines on mortgage. So yes, on the investment side of things, a seller can contribute up to 2% of the contract price, and they can leverage that into buying their rate down. When you look at, price points, shaving off $10,000 on a contract, yes, $10,000 is $10,000, but on your monthly payment for cash flow, that's $50 maybe.
Maybe.
And flip that around, if you leverage that 10 grand into buying your rate down, that could mean the difference of a couple $100 on your cash flow.
Exactly.
So big
Huge.
difference maker on there for when you're going to hold it for a while, because investors, it's kind of the beauty of the market. It's, like you said, it's very weird right now for primary home buyers, first-time home buyers. Investors can kind of wait it out a little bit and find the right property, find the one that makes the most sense to cash flow for them. There's not that emotional investment that's the same as when it's a primary home.
But if you're flipping a home and you have an end user buying the home, what does that do to their interest rate in terms of a monthly payment?
Yeah,
But you know what I'm saying?
Absolutely.
So if you're
Even
flipping
better
the
question.
home
Yeah.
and so they're going to put 2% down versus drop the price by
Yeah.
10,000.
Even
What does that do?
Even better question, and I think I probably misunderstood you, so I'll loop back
Yeah,
around.
well,
to it. And you're a flipper, and you're holding this property, and you're selling it to a first-time home buyer. It is so much more impactful to them to offer. Even there's a couple options. You can pay for their points to buy the rate down on a 30-year fixed, or you can do a 1 or 2 year rate buy down, which is what a lot of my new construction people are doing, because you can hold those comps, you can hold that sales price, not impact your long-term
Your development.
profitability, your
Exactly.
development.
Yeah.
And it to them, if you do a 2 year buy down, that can be $500 or $600 a month that you're saving them. And I don't have a crystal ball, and
But
I
still.
can't see in the future to say in 2 years. I would certainly hope we'd be in a better rate environment than we are now, and that's kind of the expectation of saying, hey, project it out, be comfortable with if rates aren't better in a few years, what your payment's going to be. But for first-time home buyers, if your next couple of years could be $400 or $500 less, I mean, that's way more impactful to them, and it's probably going to save you as a flipper money, because if instead of dropping your list price 20, 30,000, you can say, hey, I'll pay 10 grand for a rate buy down and keep more money in your pocket too.
And I've really tried to talk to investors about that, and they're struggling with that right now. It's fascinating that they're like, no, we just have to drop the price. And we're like, I understand it, but it's what really makes an impact for a buyer when you're looking at a homeowner, not an investor.
Yeah. Yeah, and it's a really cool benefit. It became really popular within the past few years as we've seen this kind of accelerating rate market. The nitty gritty of what it is essentially, as a seller, you're prepaying the interest on their rate for a few years.
Right.
So the cost on that is going to be dramatically less than reducing your price, and it's kind of more impactful to the buyer too. So it's a win-win all the way around. I think sometimes it's hard to articulate it really well, but that's what I'm here for. Is I'm happy to answer those questions, and at the end of the day, I want to make everybody as much money as possible, and also help the buyer be in the best position they can.
So, what's your word of wisdom right now for investors looking to finance deals?
Right now, I would say buy right. Yeah, you really have to be careful what you're buying. Don't do a deal just to do a deal, especially for new investors. They're like, oh, I want to do a deal so bad.
Right.
Here's a deal. I'll just do it, and then maybe I'll break even, but I'll learn something. Like, don't do that. That's like crazy guru podcast mentality. Like, do a good deal because it's going to significantly take up some serious time and stress in your life, and you want to make some money from it, right? So, and it's, if you break even or lose money, hate to say it, like a lot of people,
Depressing.
well, yeah, it's not only depressing, but it can sour you on real estate investing,
Right.
which is an amazing, fruitful, endeavor for a lot of people. And so I want to see new investors succeed. So I'd say stay patient, buy right.
Zach?
Man, hard to follow that, man. You really got me hyped up.
Let's go.
Yeah, so what I like to preach on that too is kind of twofold. Definitely buy right. If you're flipping, the difference between ordinary and extraordinary is that little extra. It's don't get the cheapest possible everything. Try and make it enticing to a buyer. That would be my 2 cents on that. But additionally, really trust the two of you in advising the data that you give to investors. You really arm them well. And I think it's important to listen to subject matter experts like yourselves because, 20, 21, parts of 22, I think really kind of overinflated, realistic, long-term figures of how investing can look. It's always about the appreciation play, and it's always about being positive cash flow. But I think also right now you have to be a little realistic. Unfortunately, you're not going to acquire that property that's $100,000 that's going to cash flow $1,000 a month. But you can still find properties that'll make you money that are a good long-term investment. And it's back to what you said, buy right.
Yeah. Well, that's what my grandfather told me. The only time you make your money is when you buy. If you don't make your money when you buy, you can't sell well.
Yeah.
So that's the key, is buying well to sell well,
Yeah.
which, they go hand in hand. So I know you've done flips and have you done any flips, or you just pretty much buy and hold?
Buy and hold. I think I might have to be talking to Dan about something though. I'm always interested in that world because I've helped many clients in that space. I'm about as handy as I can hang a picture frame after I've watched YouTube how to do it. So I certainly wouldn't be doing any of that myself. So I'd be leaning on y'all's for some guidance in that direction.
So right now, is the best strategy for investors flips or buy and hold?
Honestly, I regret every property I ever sold.
That's interesting.
In any market condition, I mean, you can ask me that when I first got started or today. I look back, I'm like, dang, I would love to still own that property. What would that cash flow today at that rate? My
Yeah.
goodness, So, and even today when I'm selling these flips, like, man, maybe that would have been slightly negative cash flow, but like, what a great location that was.
And the
In
asset.
10 years, that would be an amazing cash flowing asset, right?
Yeah.
So I'm always a big proponent of buy and hold. I think that's the best wealth building strategy out there.
Well, a lot of investors go to the focus of starting with wholesale, then doing flips, then getting to buy and hold as they feel more comfortable in the process. So, do you agree with that? Or if you had a new investor today, what would you tell them to start?
That is the traditional path that a lot of people say to do. I'm not the biggest proponent of it because I think to wholesale properly takes a lot of skills in different aspects
Tough.
of real estate.
Absolutely.
Not just one, but you need to be good at everything.
Yeah.
Marketing, sales, transaction coordination. Like you have to have a lot of skills to be able to pull that off successfully and make an actual business out of it. I mean, maybe someone can do a couple deals here and there. I'm talking about an actual living, wholesaling. So I think, that's not always the best path. People can market the same way for a wholesale deal, and there's ways to hold on to that asset. If you don't have cash, get a partner. I'd say partner with someone and hold on to that asset. Learn how to be a landlord.
Yeah, what's funny is hearing that path, I would almost advise for some investors to go the inverse route, to get the experience of having that property. I know for me, when I self-managed, my first property, I learned a lot, and I think that's what helps me working with investor clients, is I've been in those shoes. But yeah, to me, it's funny to hear that path because I would say buy and hold first, get your experience. Flipping then after you kind of know what you're doing a little bit, and then because to me wholesaling is quite an adventure at the end. So I would want to kind of, like you said, kind of know what you're doing. There's no right or wrong between all of those. All of them certainly have their merits. But that's, that would be my 2 cents. Is I think getting into a property, finding one that is going to make sense for you, that you feel confident and believe in, and kind of working backwards.
Yeah, starting with buy and hold. I guess we're on the same.
I think that's a great strategy. I think that a lot of people, I think the reverse is challenging, and a lot of people fall out early because of that, which is sad. But on a buy and hold strategy, you learn a lot. One of the things I've really tried to talk to a lot of 23 to 30-year-olds that are looking at their first home, buy a duplex, buy a triplex,
Oh, man, yeah.
buy a quad,
Oh, man, yeah.
live on one side, allow your tenants to pay for your mortgage, and then a year later flip it over to an investment and do it again,
Yep.
and do it again, and do it again, because that's a great way
Build
to build a portfolio.
Yes. Yeah, that's right. I mean, I look back and it's like, when's the best time to buy? Is yesterday, right? And I think about that all the time. It's like, man, and of course, when I was young and when we got our first house, I wasn't in this space, but I was like, man, I wish that I'd gotten a few of those multi-units before I had a family and kind of grown that out. Because the beauty of those is low money down. You get a primary rate, so the best possible rate, and you're only committed to staying there for 12 months. So you can really grow with really minimal out of pocket kind of as you want.
For either a VA or an FHA.
Yeah, actually, and even the conventional space now, that's a recent guideline update. Multi-unit conventional can be 5% down.
Wow.
Yeah, so I
That's
mean,
huge.
with good credit, really friendly mortgage insurance, really friendly rates, so it's pretty cool.
That's great.
House hacking is kind of where it's at. A lot of people are like, oh, I don't want to live in a multifamily because I'm married, and I have kids. I'm like, you can house hack at all levels. You don't have to live in, a duplex or
Right.
you can buy a nice house with an ADU. You're still house
Yep.
hacking.
Right.
An ADU offsets the mortgage and
Exactly.
makes it similar to now your payments what we used to see at 3%
Yeah.
interest. Right?
100%. Yeah.
Doesn't have to cover the whole thing, but it's still a substantial chunk that'll make a difference in your
Absolutely.
life.
Final words of wisdom.
House hack. Absolutely.
Yeah, I really believe in our market here. Kind of to give my 2 cents, I lend nationwide. I'm in a bunch of markets all over the country. In 22 to 23, USA Today put out a study that listed us as a top 10 market nationwide to invest in, and really that's borne out. We have really friendly entry prices, really friendly property taxes. Our year-over-year rental growth is fantastic. Our appreciation is strong. So I believe in this team and I believe in this market. And yeah, I mean, I love investment real estate. Always happy to talk it inside and outside of work. It's like, what do they say about whenever you get your first tattoo, you can't wait to get the second one? That's kind of how investment real estate is, right? So
Yeah, 100%, 100%. And there's so many ways to make money in real estate that, you can get into different niches here and there, but honestly, the most simple path is exactly what we talked about. It's just, just buy and hold and slow as you go. And if you do it like that and you keep maybe moving your primary residence and becoming, a landlord over time, you're going to have a few $1 million in equity and be sitting really pretty. It doesn't have to be this crazy, growth that everyone's seeing on
Right.
YouTube and
Yeah.
like, building empires. It doesn't have to be that. You can take it slow if you want to.
Man, that's
or you
what-
can go.
that's really savvy, man. That's maybe the best word of wisdom of the night, because it's kind of have this microwave culture of everything needs to be right now.
Instant.
Go.
Yeah, and that's really not good for your growth as like an investor, as a landlord. Is you kind of need to experience some stuff. I've learned a whole lot about how managing renters, managing repairs, expectations, cash flow, unexpected costs. You learn so much, and it takes time. And if you kind of take it as you go, and to add to that is I can't tell you how often folks will call me and they saw TikTok or something and they're like, hey, yeah, so how are all these people buying homes that don't have any money? And I tell them, well, they aren't. So it's really good to make sure that you have good reserves to be prepared as you're an investor, because that's like you mentioned earlier, it's an easy way to get soured is if you have an unexpected cost and that impacts your cash flow and you're not prepared for it.
Yeah.
Yeah, 100%. I say do it however it affects your life and what you have for a vision for your life.
Yep.
If you want to be a huge YouTube star and own 1,000 properties, you go do that. If you want to retire with a few $1 million and live a calm, happy life, real estate can do that for you too.
Yep.
So
Any questions from the audience? No? Really? Any on chat? that are asking any questions? They're all kind of just memorized. Okay.
Because we
Hey,
taught them everything they needed
Yeah,
to know.
that's right.
I
Well,
mean, we
it's,
covered wholesaling, rentals, financing
exactly.
deals,
Yeah.
rehabbing.
Lenders.
So, and
Oh, he has a, okay. He has a question.
I have a question from you.
Yes,
So,
sir.
the typical, what you call, if I have $100,000, I want to borrow from you for a flip, maybe.
Mhm.
That's what I do most of the time. Usually, what it takes 3, 5 days, 10 days, or what? And what are you looking for?
Yeah, so I just want to see that you have at least 600 credit and at least 25% of the rehab budget in cash. That's it. $15,000 minimum. If you've got 600 credit and 15,000 in your bank account, you're qualified.
You qualify.
Then you just beyond that, you just have to have a good deal.
Typical interest rate or any points, what are the usual I can expect to pay?
Sure. So yeah, let me preface this saying we're more expensive because we have, obviously more aggressive numbers. Typically, your first 3 deals with us are going to be 2.99 points in the origination, 12.99 on the rate. After 3 becomes 1.99 and 10.99. So once you join the club,
Yeah, that's right.
you never leave the club. That's where it's really good.
Well, this has been a great conversation. I know we've had people on Zoom, and we have a whole YouTube channel that we're going to really be putting this out to. And we did a great podcast. So we're very grateful for you guys. And so, how do they get a hold of you?
Best way, probably follow me on Instagram and DM me, Dan the Hard Money Man. That's pretty easy to remember.
That's really good.
Think hard money. Yeah, Dan the Hard Money Man. You go to longhorninvestments.com. Type into Google Longhorn Investments, read our reviews, know what you're getting into. I think it's all pretty good stuff, but that's a pretty easy way to get in touch with me.
Okay. And Zach?
Yeah, so I recently got a fun new URL for my landing page. It is Zack Mortgage, ZACK mortgage.com.
Oh, that's great.
Very easy. So yeah,
amazing.
click there, and my full contact, or my phone number is 269-209-0123, 0123, nice and easy at the end. But yeah, happy to answer questions, and I do this all the time for investors, even if I'm not on their deal or they're buying it cash. Like I'm happy to, as a fellow investor, bounce ideas.
Well, I love it because you can invest all over the country,
Yep.
help them with deals not just in Chattanooga, but in a lot of different states.
Yep.
And you're working with Longhorn.
Yeah, they're
Already,
Longhorn really
you're
is the best.
one of your
it is. So,
favorites.
yeah, they're fantastic.
Yeah.
Yeah, I was just thinking for everyone that wants to use the BRRRR strategy, that wants to buy and renovate and refinance, we got the perfect combination for you here.
Yeah, the
all you
bachelor
need.
was-
And
yeah.
we didn't even realize we were creating
I did
this, but we
halfway through
did.
this. But yeah, that's why I pointed it out.
So, you have an office over here?
Yeah, my office is in Main Street in the Feed building.
Main Street on the.
Feet.
Yep, right next to the Feed, the restaurant.
Yeah.
You'll get the wings, you'll never forget it.
No, there are good wings there.
All right. Well, thank you so much.
The loan that you have earned money, is it a interest only or a premium or
Yes.
relationship?
Yeah, because it's just short term, so it wouldn't make sense to
Usually, what's the duration?
Yeah, I mean, their average 4 months term is average payoff time, so we'll typically just do a 6-month loan, and they can keep extending it if they want. We're not gonna say, oh, you've had it out too long, give us our money. 'Cause
Right.
we like getting the interest payments, so.
Have you seen any difference recently?
Difference
With-
as far as,
Is taking a little bit longer for
oh, unfortunately, yes.
Yeah,
Yeah,
for
I think
property
our
to-
average payoff time is going up, unfortunately.
Yeah.
We went a good 6 years without seeing a single foreclosure in Tennessee in over 800 loans that I originated.
Wow.
So it was really good, aggressive time. We were lending 100% to brand new investors, not knowing what they're doing, and everybody was successful. We were like, wow, Tennessee is amazing. Borrowers are amazing in Tennessee. Well, this year we're returned to sort of a normal market. Last year too, things are taking a little bit longer. People get to selling their flips now, and they're sitting on the market, but they still have to make interest payments
Right.
on it.
Right.
They're maybe exhausted all their capital. So
Right.
we're kind of looking at a few properties right now that are getting into trouble. It's an unfortunate situation, but it goes along with
Right.
market
Well, and that goes
conditions.
back to my discussion about lowering the price or buy downs. Because that's really crucial, what the impact is for a buyer versus,
Yeah, to the investor, yeah, so
Yeah.
keep as much money in their
Yeah.
pocket as possible.
Exactly. It's hard for them to understand that sometimes. Though. All right. Well, thanks everybody for being here. Reach out to these guys again one more time. How to get a hold of you?
Dan the Hard Money Man, Instagram.
Zach Mortgage, ZACK Mortgage.com.
All right. Thanks, guys.